All right, so I guess time to get started. I am Eric Reach. I'm an attorney here in Johnson City. Been practicing since 2005. Yes, that's it. 5. Primarily in real estate since I started. Also did criminal defense for a while. Did bankruptcy for a little while. Family law, but I quit doing that a long time ago. Juvenile law, that sort of stuff. Now pretty much all I do is real estate. Also with Matt and with Ariel and Kendall, I deal with their evictions. That's primarily the bread and butter of what I do nowadays. So that's a lot of it. But I also been doing title searches since 2005, closings, all of that. Invited me today to talk about Real Estate Settlement Procedures Act, which is a very, very long and complex act. So I'm gonna do a basic overview of it and try to focus it more on what really affects real estate agents. However, there is a lot more to this than what I'm going to talk about today. So if you have more questions about it, please ask me while I'm talking. I'd rather you ask me questions while I'm talking, because if you stand up here and start talking for a while, you start thinking people just want you to shut up and go away. So if you ask questions, it helps me out to know at least you're listening. So other thing is, the problem with the Real Estate Settlement Procedures Act is it changes pretty much daily. As I'm talking, it's probably changing right now. So people come up and it's not only just the act itself, it's the regulations that come off of that act. And we're talking hundreds, almost thousands of pages worth of regulations off of it. So that's where the problem comes in. So I'm going to give you an overview of it today, but just if you have a question, I've got my cards up here. If I don't know the answer immediately, I'll find out for you. Okay. So let's talk about the boring stuff here. Real Estate Settlement Procedures Act, also known as RESPA. I'm not a fan of acronyms, but that's what we call it nowadays. So passed in 1974. This is in the time period when the Congress is passing a lot of. You got Fair Housing comes out close to this time. You've got Civil Rights Act coming out about 10 years before this. So you're talking about this time there's a lot of regulation coming on. This was passed in response to what was basically considered to be the Wild West of real estate settlement. We're talking major kickbacks, banks, real estate agents, closing services. We're talking money flowing back and forth. No one knows where it's going. Fees that are just pay me $1,000, don't worry about where it goes, that type of stuff. So it was passed in connection with that type of perceived industry going on. What it primarily meant to do is protect the consumer, to let the consumer know what they're paying for, who they're paying it to, why are they paying it, where is it going. That's why we have the HUD statement. That's why we have a good faith estimate we're going to talk about. That's why we have all that stuff nowadays. People think sometimes that now there's too much information that's being given to consumers, but the thinking is, well, the more information you put out there, the better off the consumer's going to be. So this is, since 1974, it has been amended well over 10 times, actually formally amended, but that's not the whole story. The story is, as we talked about, the regulations, in particular, make sure I got the right letter, Regulation X or Regulation Z, as it's a Reg Z, Reg X. As they talk about, that's where all the regulations come in. That's where you get the appendices that have the new forms for closing disclosures, HUD closing statements, good faith estimates, all that stuff. So that's where you get all that stuff coming in. It changes all the time. Now, what does RESPA apply to? It doesn't apply to everything, but just about everything. I'm going to make sure I get the exact phrase here. It applies to any federally regulated mortgage loans. What that means is any loan that is, starting off with, any loan that comes from a bank or a lender who is insured by, either regulated by the federal government or is insured by FDIC or National Credit Union Association, which is also regulated by the government. So pretty much any loan that you get is going to have a federally related loan. And we're going to talk about some loans, some transactions that RESPA does not apply to, but I'm also going to give you a cautionary tale about that as well. So pretty much now, the other caveat is it has to be for a residential purchase, 1 to 4 family residential purpose. So pretty much any loan for a residential 1 to 4 family purchase is going to be covered under RESPA.
Under RESPA.
Right. There are some things.
Is there a RESPA for commercial side of stuff?
No.
Really? Huh.
There are
free throw,
basically. Yeah. There are some other considerations on that, but pretty much when you talk about commercial, even commercial leases or commercial things, they consider the parties to be more savvy.
Okay. Yeah.
So, whether they are or not, it's a different story, but you tend to get more of a savvy type of person, so they don't have all these regulations and things. This is directed at residential purchases.
Okay.
That's what it's directed at. There are some types of loans that RESPA does not apply to. Construction loans, temporary construction loans, it does not apply to. As long as, now, construction loans are typically 2 years in length, I think it's the maximum they can be. They're typically interest-only loans. They're meant to be temporary while the person's building. Many times those are converted into payments, as they call it, made permanent on a 30-year note or something like that. So the conversion to the 30-year note is covered by RESPA, but the actual initial, I'm building this house, I need the draws, I need the money in the account, that's not covered by RESPA. Okay. Now, that's just for the construction. If they are also purchasing the property, a lot of times I want to buy, I'm going to, like, Kelly, I'm going to buy your land, I'm going to build on it. The purchase of the property is covered by RESPA, but the construction loan is not. So, cash transactions, pure cash transactions are not covered by RESPA. Now, let me just put a caution on that. The definition of what RESPA covers, federally related loans, well, for any institution, that's about as broad of a definition as you could possibly get, because the federal government pretty much has everything to do with any banking institution out there. And most of the time, the purchases are coming from, unless they got the money sitting in their backyard or something like that, it's going to be coming from a bank somehow, some way.
Right.
So you're going to have some connection. So just be careful on that. And just because the cash transaction doesn't mean that it's that it's no holds barred, you can do whatever you want to. You still got ethical concerns, things like that, but you won't have the federal government coming in on it. Loans that are on property of 25 acres or more, as long as there's not a residence on it, or the intention to put a residence on it. Someone's buying extra land attached to the house, buying the farmland, the land that they grow hay on, or whatever. That's not covered. Okay. As long as there's no intention of putting a house on it at the time they get it. Now they may decide later to, but that's a different story.
As long as there's no writing or bound document.
Right. As long as there's no intention right at this, when they get the loan to put build on it, it's not covered. Business purpose loans, and that is, I'm going to put my office building or I'm going to put my factory on this land, not I'm going to buy this land and put a subdivision on it. Okay, that's a different story. That's going to be for residential purposes in the future. Even though technically now it's a business decision because they're buying it for development purposes, we're talking about actually, I'm going to be using this for business purposes, as in factories, office buildings, medical buildings, things like that. It doesn't cover that. And also vacant land, as long as it is not intended to be put a house on it.
Developed at all.
Right. So if I'm just buying vacant land because I want to have mountain land to do whatever I wish, that does not cover. RESPA does not apply to that. You are probably still going to see most lenders using these same forms for those loans just because they don't want to have a problem. Better be safe than sorry with it. So you're probably still going to see it, but if you don't see it, that's the reason why.
Okay.
Cash transactions typically don't go through a lender anyway, or aren't going to go to a bank anyway. It's going to go to an attorney or title company or whatever. So that's going to be, for instance, when I do cash transactions, I don't do the closing disclosure statements and all that stuff because I just do the standard HUD one seller, buyer, that sort of sheet. So, because I'll get into my complaints about the closing disclosure statement then. Trust me, I've got it.
Like a DSCR loan, where it covers that as well, even if it was like because I don't know if that's government backed or not. The one that they just look to make sure it's cash flowing. They don't really look at your income.
If it's going to be from any federal loan company and it's for residential purposes, it's going to be covered by RESPA. All right. Does RESPA apply to me? I'm going to tell you, listening to me talk right now. Yes, it does. It applies to everyone that's involved with a real estate settlement. That includes myself, attorneys, real estate agents, lenders, loan officers, title settlement agents. If you're using a title company, it applies to everyone down the line. There's very, very few exceptions on it. You know, the guy who does the termite work's not covered by it, but that's about it. Okay, everybody else is. Okay, so the main thing now, majority of RESPA is geared towards lenders, just like Fair Housing Act is. A lot of it's geared towards lenders. So majority of it is in that. So what we're going to talk about right now is what's required of the lender, and this is not everything that's required of the lender, but this is just what your clients are going to be seeing from the lender. So when you start guiding your clients through the purchase process and the loan process, and asking you what should I expect, here's what you should expect. At the time of application, they're going to be getting a booklet. They should get a booklet from the lender that says, this is what to expect. This is what type of cost you're going to incur. It doesn't have any amounts, but it says you will incur costs for closing, you will incur costs for credit check, flood certification. There's about 18 million different types of things that you can be charged with on that. Loan origination fees, closing costs, all that stuff. It's going to have that in that booklet. That booklet is not very informative, but it has to be passed out, so they will get that. They also at that time should be notified whether or not their mortgage will be serviced or sold or serviced by someone else. A lot of them use that mortgage by MERS, MERS, mortgage electronic registration service, or you may, for some reason it always goes to Wells Fargo, but you may get your loan with whomever and they're going to sell it to Wells Fargo immediately. It has to be disclosed at that time. Vast majority of loans that you get through brokers, a lot of times when you get it through a bank, they will sell it off. And a lot of times brokers typically already have it sold by the time they approve the person for the loan. So they know who it's going to, what it's going to. So they have to disclose that at that time. Some banks don't service their own loans, even though they keep the rights to the loan. They don't service it. That has to be disclosed as well. A different servicing company is going to be servicing it. That has to be disclosed at that time as well. That's a more recent change with it. However, the most important thing you're going to be getting is the good faith estimate sheet. That's this beauty right here. This is just the one that HUD passes out, that the HUD has out. It may take a different form than this. Everybody's real estate closing software has a different version of this, but it has to have the same information on there. The acronym is GFE. So when you hear GFE, good faith estimate, that's what they're talking about. This gives the borrower all the costs that they are expected and what those costs are estimated to be. When we get to the closing disclosure statement down the road, when it comes time to close, these costs have to end up being within a tolerance of 10% of the good faith estimate. That's to keep from any surprises for the borrower at closing. So that way you don't have any, my flood certification settlement is $400 instead of $4. So that's what you get. This form does not, it is an estimate, obviously. I could go on a tirade about it, but I won't. I'll just give you the short version of it. Oh, no problem. The problem with these forms, they get longer and longer, and they get more and more wordy, and they get more and more information on there that makes it more and more confusing. So if you need to sit down with your client and look at it and see what's on here, they may come to you and ask about it. So you're the one who sees these types of things every day. And if you have a question about it, again, you can always call me. I'll be happy to talk to you about it. So not a problem at all on that. But that's what the good faith estimate is, and that's what your borrower is going to be banking on, no pun intended, as far as when they go to closing to what to expect to happen. Okay? And also understand that this is based upon the locality that they are in. So if you were helping someone buy property who's not in the Tri-Cities area or in Knoxville or wherever, this may be different. You may see a different tolerance of ranges on here than you would. It's based on the locality of the property, not where they are, not where they're physically sitting right now. Come on, go. Okay. Now, moving on, 3 days prior to closing. This doesn't always happen, but it should happen. Is they will receive, your client should receive a HUD-1 settlement statement or the closing disclosure statement. That's the second part of this. I despise this form, I will tell you that right now. I cannot stand this form. Because, again, way too much information on here. It could be done a lot simpler than this, but this is what they decided people need to know. Closing disclosure should be given in 3 days prior to closing. That way they have a chance to review it and to look at it and discuss it and decide whether or not they want to go through with this.
Which rarely happens.
That's exactly right. Typically this thing is done like this. All right, here's your closing disclosure statement right here. I'm sitting at the closing table. Here's your closing disclosure statement right here. Look through it and sign it. Personally, I don't like throwing paper in front of people when they're signing to say, here, sign this. So I try to make sure if I get the closing package, whenever it comes time for closing, and I will tell you, a lot of times, I don't get the closing package until the night before.
Or the day of sometimes.
And here's the sometimes day of. And here's the other behind the scenes deal with this. They make me do this. I have to do this with their numbers. They give me the numbers to fill this out. The package, what you see here is from my software package, so that's why it has my name on it. But they give me the numbers to put in here, but I have to fill this out because there's about 2 figures on here that I put in, and that's for the recording cost and for the attorney's fee. So why I can't give them that number and then they fill it in, I don't know, but I have to fill this out. The closing agent fills this out. But see, if I don't have their numbers, I can't make them up, so I can't fill it out. And a lot of times I don't get that until the day of, because as you guys well know, there's always, the closer you get to closing, the more moving parts happen, the more stuff happens, people change their mind, the termite guy hasn't been out there yet, you don't have a bill,
Or people just lazy, like last week, I figured the file and said, oh crap, we got to close this week.
Exactly, and then all of a sudden it's, we gotta close, I gotta get this thing done, it's the end of the month, I gotta get this done. So that's what happens with these things, so that's what happened. So it's supposed to be 3 days before closing, but it doesn't happen.
So you're getting the blunt end of pretty much all ends of changing with times with agents, changing with trying to work with that, having to fill that out, waiting on everything.
There's a lot going on because typically when you're with your larger lenders, now if you're looking at when your local lenders, a lot of them already close their own loans, like Elizabeth and Federal does, and some of the other local ones do.
Right.
But if you're dealing with like Quicken Loans, any place that's a mortgage broker that's selling it to Wells Fargo, any of those places, you're dealing with people. You're dealing with people at a call center somewhere not local, and sometimes it's not the same person you're dealing with. And then they'll have and I could go on this one, but they'll have the document team. I hate that phrase. But they have the document specialist. They'll have, you gotta go from here to here to here to here to get it. And a lot of times I'm not getting documents until the day of.
So this is pretty across the board for any closing agency dealing with, they're all having to fill that out.
They're all having to
I guess I'm just
closing
learning a little
disclosure.
bit more of the, I always felt they always got the blunt end of everything,
Oh,
but
yeah.
I didn't know that.
Oh yeah, and see, and I've had to personally tell people before, look, I just got this today. I know you guys just saw it. If you want to, it may throw off your numbers a little bit, but if you want to take a look at this and come back later, by all means, please do it, because you're basically waiving your right under RESPA to look at this.
Right.
And I don't know if it's, and I don't think it's a trick that they're trying to do to people, because I think by the time we get to the closing table, they pretty much minds are already set and they're all
Right, yeah.
and
Yeah.
But sometimes you guys have seen these disclosure statements too. There's some pretty large fees on there, especially when we talk about broker, that is sort of like mortgage broker, that type of thing. There's pretty large fees on there, so I can't say that's what they're doing, but if you're at the closing table and you've got a client who's like, I don't know what any of this means, I haven't had a chance to read this, you tell them, let's go next door, let's clear everybody out of the room,
Digest.
let's look at this stuff.
Right.
Absolutely.
Line by line.
If you get into a closing table and someone's trying to say, well, you gotta sign this, you gotta sign that, tell your people to look at it, read it. I don't care how long it takes. Tell them to read it.
That's right.
There's too much, I mean, you've all seen it, the stack of paper's that thick for a loan.
Oh, I know.
I mean, cash transaction, I can get you done in, 5 or 6 pages. That's about it. Most of that's if you get title insurance. But if you're talking about loans, I mean, you're having to certify what your name is on there and stuff. So, if you've got clients that don't understand it, look, take your time.
Right.
Take your time about it. If they don't get that package early, take your time. But yeah, behind the scenes, your closing agent's the one doing this. The RESPA requirement we talked about, RESPA requires that the good faith estimate be within 10% of the actual final closing. And you will see that on page 3 of the closing disclosure statement. At the top, you will see it'll have the loan estimate on the left, it'll have the final on the right, and it'll say, did this change? Why we gotta have yes or no on there? I don't know. Somebody can look at 2 numbers and see whether or not it changed, but you gotta have it on there. So you will see that, and if it is more than 10% of the change, then the lender has to keep that. That's
Okay.
how it works.
Say that one more time.
If it's more than a 10% change from the estimate to the final, the lender has to keep the remaining over 10%.
Do you have a quick question?
Yeah.
So I thought the trade law actually required lenders to give that 3-day notice.
Yeah.
But is there a loophole that they're getting away with by not doing that and just
Oh.
waiting until?
Just in the rush.
I'm on the same bump. I'm sorry. I didn't mean to interrupt. Go ahead.
Yeah.
When they say disclose 36 hours prior, disclose, is that just
Generally.
general disclosure of numbers or disclosure as in these are final? and here's the 36 hours?
Disclosure means this form is given to them 36 hours prior to.
Must they sign it or is that not a requirement? I thought it was.
I thought it couldn't be changed or anything like 36-hour
Oh.
disclosure or, because we always used to work around that.
Yeah.
I'd have to make sure,
You
but that
can
kind of
waive.
dissipated away the
Yeah.
more
They
faster.
You can waive these requirements. I mean, the client can waive these requirements.
I see.
But the requirement is 36 hours ahead, and honestly, I think it's, or 3 days ahead, and honestly, I think it's,
Just seeing this.
yeah.
Well, that's all it is. Because
It's just
most of the
seeing.
time, it's just,
The actual,
we're still getting that the day of.
Yeah.
But that, as the consumer has all their interest rates and stuff on it, and that's
Right.
what they're, okay.
and it has their total amount that they paid the loan throughout the 30 years, whatever it is, it has all that on there, what the final cost
It's
is.
36 hours?
3 days for RESPA.
Oh, okay.
But that doesn't
I
mean
thought it
that-
was 17.
There's TRID and there's TILA and all that stuff that also comes into play, and that has different regulations. Right, for RESPA purposes, it's 36 hours. Okay. There's other regulations. A lot of times you will see TRID/TILA
Okay.
disclosure form. There's all sorts of other forms out there, so you will see some of those coming in. But bottom line is, your clients need to see this ahead of time. The closing table is not the point. Not the point.
Yeah.
Is not the
And there's
time.
always mistakes on it anyway.
We're always getting it the day before closing.
Typically, I'm having to rush back there to the office, print things off the day of closing.
Because you
because
don't
I'm
even
getting-
get it from them until then.
Yeah, I'm not even getting it ahead of time.
So what are they finally disclosing to the client?
They're disclosing
Just
this whole form is what's supposed to be disclosed to them.
sounds like, okay,
But a lot of times people are so, they're.
right.
So in that sense,
Mhm.
do they need to be extending the closing?
They should be.
Because that's not yeah.
They should be.
That's why I'm,
Because it's, I mean, sometimes we don't get that, or someone's traveling here and their bank's only there.
That's-
I'm like, okay, then we need to figure out what's happening a week before that. Like, if you don't think you're gonna have it, they're driving here and their bank's only there, so they can't do that and they don't want to wire it, or
Right.
I'll tell them to bring more to the table. I'm like,
Mhm.
if you think that's the estimate, we can cut you a check back.
Bring a couple of
But-
cashier's checks.
But
for
we do need to
$1,000
review that to make sure that we're all good.
And sometimes, you know how y'all know more than I do about when people are getting ready to buy a house and ready to close. They've already got movers planned. They've already got this
Absolutely.
plan. They're gonna close no matter what. They're gonna want to close. I mean, they want that loan, they want those keys, they want to get in that house. Or the seller wants to get their check.
Correct.
So, a lot of times they'll end up just waiving this and going on. But if your client sits down there at the table and they have a question about one of those pages and they don't understand it, and understand that if it's an attorney closing it, like if I'm closing it, I can tell them what that form means and what the legal significance of it is. I can't advise them whether to sign it or not, obviously. All I can tell them is just, if you don't sign it, I can't disperse the loan. But they should be explaining those forms to them at all times,
Yeah.
no matter what. And seriously, just flipping pages and saying sign here, sign here, sign here, that's disingenuous. It's not the right way to handle it.
No,
We're talking hundreds of thousands of dollars, which is a lot of money for a lot of people.
absolutely.
And they're gonna, and this is the biggest investment they're gonna make. So they need to have all this stuff up ahead of time.
A lot of people don't read anything.
Oh, no. No.
We'll
They
get
don't.
all the documents, and I'm like, I could have put the blood of your firstborn in there. You have no idea.
Oh, yeah. Oh, yeah. You know, how many
Always put
times?
my name on the deed.
Exactly. It's like, this means I get it, right?
They just bought 19 houses this
You
year.
know, it's like,
I
you
don't
know.
know, to be the dead horse on, I feel
Yeah.
kind
Oh, no, no problem.
of, just trying to make sure I'm trying to understand on disclosing. So somebody's got these numbers to disclose, the lender to the consumer, correct?
Yeah.
You have to put the numbers on this paper,
They give me the numbers.
but you're not getting that until they're disclosed to the consumer.
They give it
So
to
what
me.
paper are they consumer receiving with the numbers?
That.
So it's already filled out.
It's already filled
From the
out.
lender?
From the lender gives it to me to fill it out.
But what if you don't get it? It's okay.
So I don't get those numbers until day before,
So
or
how
I
do
get
they
the final
get
numbers.
36-hour disclosure?
Now, understand now, sometimes I'll get the preliminary numbers, and I'll disclose that.
Okay.
And then their names might change slightly because, the termite bill comes in or something like that. So there might be a slight change. There can be some changes between that 36 hour and that's 3 days. But as far as the actual initial disclosure of the closing stuff, that closing disclosure statement needs to be done 36 hours ahead, even if it changes a little slightly throughout the time. But that's the document that needs to be disclosed within that. And the numbers come from the lender to the closing agent, who then prepares this right here. And many times, if I do it, I didn't do it on this, but I will stick draft on here and watermark on it.
That's a good idea.
That's sufficient to do it that way, because as you pointed out, it's got their interest rate, it's got their escrow estimate, which is another big deal with RESPA, making sure that you have the right escrow accounts. That's more towards the lender side. It's got the projected cash to close, all that stuff on there. So it's got all of that. But now it can change slightly, and sometimes it does change to the last minute. That's
I
okay.
feel like sometimes lenders will share it with the consumer ahead of this process, but it always changes.
Right, I mean, I guess that's where I'm getting confused. As disclosing settlement, to me, those numbers are final. They shouldn't be
The
changed.
numbers don't necessarily have to be final at that point, but this form has to be disclosed to them, because the interest rate's locked in,
Right.
all that stuff's locked in.
That might have been,
We're mainly talking about some costs that might be here and there off, the number of points they're having to pay to get the loan and all that stuff, that's all been disclosed to them at that point. So, but, as far, because, most people, if you gotta bring cash to close, they've gotta go to the bank and get it,
For sure.
right.
and they wanna get the exact amount, I don't blame them. They wanna get the exact amount and bring one check to the settlement table so that it can be, paid off. And as you pointed out, a lot of people are driving,
Yep.
from out of, especially now in this area now. We have a lot of
Absolutely.
people from out of state that are coming in, closing, they don't want to wire. I don't blame them for not wanting to wire. I'm not a fan of wiring myself. In fact, my title insurance underwriter tells me to avoid wires if at all possible because of fraud.
So many issues.
Over Public's my underwriter, they tell me to actually, if at all possible, overnight the check for payoff. If at all possible, I'll wire. If I have to wire, I use a service called Certified. Certa ID is what it is. They actually verify independently the wire and all that, what the wire, the account numbers and all that stuff. So they do that. But I'm not wanting to wire, because you got people who are coming in they need to know these numbers.
Yeah.
You know, a couple of dollars off ain't a big deal. You can.
And it's always the stressor of the whole deal right at the very end.
It is.
I know.
Making
What have
sure
I got
you
to
get
bring
it,
to the
you get it,
table?
you get it, you get it.
That's always the.
Or they think you're the title company, and they're like, what do I do now?
Yeah.
I don't know.
And then something hits the fan and then they're drawn in.
Yeah, there's that.
That's like it's part of that.
Yeah, and you know, and the other thing is with, you know, what always killed me is you get to the closing table, I've got everything drafted, and then somebody's, oh, my middle initial's not this, it's this. Like, let's just find out. And I agree with that. The other thing that, well, and this gets into what we're going to talk about. By the way, anybody else have any questions about that closing disclosure statement, anything like that? I know I kind of went off track on that, but it's
Is that only need to be done to the buyers, not the seller?
just the buyer. Seller gets the seller's closing disclosure, but they don't have to get that till
Right up.
yeah.
Okay.
They're just getting checked. They don't care.
Because sometimes we'll have agents that's like, well, we should have got this for the sellers. Like,
Well, they can ask.
yeah. They're like,
It's ready.
wrong.
This form for the seller is ready whenever the buyer's form comes out, so they can contact the seller, the closing agent and get it. It's not like it's not a hard thing to do that. But yeah, seller doesn't have that requirement. It's only for the buyer.
Okay.
So yeah.
Awesome.
But good question. The other thing about this, the borrower also needs to get the escrow statement showing what's going to be held in the escrow. If they are escrowing it, not every bank requires it. I do not know what the regulations are on when it's required and when it's not. My wife can tell you 100%, but she runs a bank, so I don't do that. But they are escrowing taxes and fire insurance. They are required to have at least a 2-month reserve and no more than a 2-month reserve in the escrow. And keep in mind that form, the escrow, I didn't print it off, but the escrow form that shows it'll have negative numbers, positive numbers. It has, you know, all these things on there. And it has, then there's an adjustment on the closing disclosure statement that shows, you know, sometimes they take money away from them, they actually give money back to them. So it all depends on what time of year, when taxes come out. Are they paying insurance ahead of time? Are they paying it? But the escrow disclosure statement has to be given to them at the same time they do the closing disclosure statement, and that should be done. That's easy to do. Those numbers don't change. So if they've gotten their insurance in place, which is another last minute thing I know that y'all have to deal with them trying to get their homeowners insurance in place.
Mm-hmm.
So that's something that you probably need to be working on early on as y'all go over. So.
Don't they have to have it within 10 days of the binding agreement?
A lot of times they have to have it to the borrower, to the lender won't close it without it. A lot of
14 days.
times.
Yeah.
But each lender has their own, typically they do. Also, and we're going to talk about this more when we talk about kickbacks here in a minute, but the last page I gave you guys was the affiliated business arrangement and disclosure statement. This needs to be given, really, it has to be given at closing, but it needs to be given really as soon as you possibly can. We'll talk about this in a minute because this is part of the anti-kickback provision that really affects real estate agents. And that's where I'm going next on it. But that form should be given out to them at no later than closing. Definitely closing is your manager's day. So that brings me to the next topic. Referrals, kickbacks. That's probably where real estate agents have the biggest, where RESPA targets real estate agents the most is on kickbacks and referrals. This industry is all about relationships. It's about people that you work with, who you trust. You guys have people that you trust. You've got, contractors that you deal with. You've got termite inspectors. You've got all that, that's fine. The issue is if you are receiving something of value, which is about as vague of a definition as you can get, a thing of value, actually it's even worse than that, it's a thing of value, in return for the referral.
Uh-huh.
So and that means not just, hey, I know these people, they're good. This is, I refer to them because they give me a discount on mine.
Oh, okay.
I refer this termite inspector because it gives me a discount on my,
Okay.
on when he treats my house, he gives me a discount. That's just an example of it. that's an improper kickback. Is what that is. Okay.
If you're benefiting from it alternatively.
Right. Even if your company is benefiting from it, but that. You don't see nowadays every referral you give me, I give you $50. You don't see that nowadays, okay, as much. At least not out in the open, you don't see it. But normally you see, hey, refer work to us and we'll give you guys a discount on it. And it can even be implied, by the number of referrals I make, the more work I get. I'm going to get into an example here in a minute of the more referrals I give to these people, the more they're going to let me do work for them. If it's implied in the relationship between you and that lender, or you and that settlement service provider. It can be in the form of discounts, gifts, fees, stock options, trips, things like that. So you have to be careful about what you get.
I'm missing out. Somebody didn't tell me.
Oh, I know. Before 1974, this was all legal. I mean, you could have gone. Before 1974, you could have done all this. It must have been great back then. Also prohibited is the splitting of fees between two or more parties without disclosing that the fees are being split. So that doesn't happen as often, but that is something that is prohibited as well. One thing is, this is kind of an obscure one, but sometimes a seller will require title insurance to be purchased from a particular title insurance company. That's not allowed under RESPA. Buyer always chooses, no matter what. Just remember, bottom line on all of this, when I start talking about kickbacks and referrals and all that stuff, buyer chooses who they want to deal with, no matter what. Obviously, they're going to ask you, who do you guys recommend? They're going to. They chose you as your real estate agent. They're going to ask you guys, your advice. They want your advice. Obviously, they're going to ask you, but buyer chooses who they want to work with.
And side note on that, we do have a form in Dot Loop that is a vendor provider list or whatever.
List of professionals.
Perfect.
You can add 3 options for whoever you choose. And then
That's perfect.
we've got a team that has its own professional service disclosure and election form, basically, that says, we are not telling you need to use one of these people, but all these different disclosures. So if you guys want to see a copy of that, you can
Use that form, definitely.
And there's certain areas
And they
you have to
sign.
have 3 options,
Even
right?
text.
Recommended 3 options, yeah.
Which is
Correct.
title companies and what's the
home
area?
inspectors.
Home
Anyone
inspectors.
that's pretty much any time someone asks you, can you recommend someone to do this for me? Give them 3 options. Attorneys have kind of the same sort of rules, I guess. But what you want to do is avoid endorsing someone.
Correct.
Because if someone comes to me and says, hey, I got this problem. Well, I'll give you the example. Back when I did criminal law, people always ask, do you know a bondsman? Obviously I do. But not because I've used them myself, but because I've never reviewed them for other clients. But they will ask, do you know bondsmen? Well, what I would tell them is I give them 3 options of bondsmen that I've worked with, and I would say, if I needed a bondsman, I would call one of these places right there. That way you're not endorsing anyone. If you say, yeah, call Joe's bonding company, and Joe's bonding company does something that's totally below board and illegal, suddenly you endorse these people. You told me to use these people. Now you're in that situation. So same situation, even beyond RESPA, it's best to just give them 3 numbers. If they say something, well, do you recommend one of them? Any of them are fine. When I need this type of service, I contact one of these 3 people, one of these 3 places. Contact them, talk with them, whichever one you feel comfortable with, go with. Okay. And if they want to go with somebody else, that's fine too. They choose them.
Even if you just passively conversate the text message when you give out a number, it's probably best safe to say to always include on that. This is just not necessarily a recommendation, but this is not somebody you have to use. I always write it out in that. Hey, here's a name, but you also have the ability to search anybody else you may want to look at. And I always imply that on my text
Also
messages.
recommending that the buyer also make sure that they're still currently certified, because if You know, we have to
Absolutely.
include 3 people, and one person may be older, out of business, or no longer certified or up to date or anything. We want the buyer to have that liability to hold us harmless for.
I've even had people say, you know, in trying to use, and I guess the way I am projecting my advice in that, hey, this is not advice, you know, this is not me telling you what to do, but yet this is, and then that sometimes I get like, well, what's the services? Well, then I step into, well, it's the legalities behind it. If I push you one way, it could, you know, so I had to step back and kind of juggle which way you all want to go through.
That's where you gotta be careful, particularly like home inspectors.
Because that's where we can get most of the trouble.
That's where
in
it
any
is.
deal.
If they, and also too, they think that, well, you gotta look at it from a consumer standpoint. All right, I'm coming to True North Real Estate Advisors. They're saying I should use this guy right here to inspect my house. He totally missed, you know, the gas leak in the basement.
For sure.
So I'm looking at, well, they told me to use this guy, or they recommended this guy to me. But if you say, look, here's three people, even more, you can give them as many as you want, and say, look, here's a list of people that you can call that we know of in the area. It's up to, you know, please contact them, investigate their, you know, talk to them, interview them, investigate their credentials, reviews, whatever you want to do. That way, you've done the work on getting the numbers and getting the providers available. They do the work on getting the.
I usually just send that, if I'm about to meet them, I'll get on the phone with them and be like, hey, I'm gonna send this over, so if we do find a house, this is a list of professionals that we've used in the past. If you wanna use one of them, that's fine. Whatever it is, you know, just let me know if you have any questions.
And I would also, like Ariel said, if you've got that form on your software, maybe want to rotate that some, so the same person's not coming up at the top every time. That sort of brings me back to the, I don't know why I got on this topic, but it brings me back to the bonding, the bail bondsman. They always fight to be the first one on the list, because no one ever knows what bail bondsman they want to use. They always call the first one. That's why you see like quadruple A bail bonding. So if you keep putting them at the top of the list, they're going to think you're endorsing them. So I would rotate. I would rotate who you put up there, so you're not getting into a situation of making
That's a
those
good
kind
idea.
of recommendations. So, not to say if you got somebody that you trust and you know that you like to use, you know, perfectly fine, but just let them make their decisions.
And one more note too,
Yeah.
with the vendors that are participating in the broker sponsorship program, that is run through a third party company. It's not
Yeah.
run through True North.
They
It's run
typically
through
are, yeah.
So it is run through like a True North marketing company. That's not a licensed brokerage, and nothing comes to the real
Right.
estate company. So
I'm aware of that. Yeah. You keep that third party out of it. Yeah,
Yes.
off of you. Yeah. So, and that's the same thing with attorneys, closing agents, all of that. If they, you know, if you got that list on there, you know, same thing. If the closing agent decides to take all your money or whatever, you've endorsed them.
right.
Problems. So
Agreed.
always let them make a decision on that. Some of these we'll go through some examples. Some of these we've already talked about, but are pretty obvious. Real estate broker pays agents $20 for each referral the agents make to the real estate broker's affiliated mortgage company. Anybody think that's a problem?
Yes.
Okay. Yes, it is.
Very
Very much
much
so.
50.
I think I went $20 trying to keep it under the table. It's a little easier to give 20 out.
What if somebody gave you a gift card for wanting to use their associated business? That's still
Yeah.
okay?
Yeah.
I think
Now.
we've been at a place in which we were
Yeah.
offered.
Yeah.
What about maybe Botox?
That was also
That
at
was
the other place.
Free Botox. Wow. That's taking it to a new level on kickbacks.
Stuff's painful too.
He's 85. Looks good.
There is an exception for payments made between employer and employees, and also payments between a broker and salespeople do not apply. So that your relationship with with your real estate broker does not consider that, because you're considered to be an independent contractor, and it's different. That. So don't be concerned about that if you get paid by the by True North Real Estate Advisors for your services that you're violating RESPA. You're not. All right. I got a person who can help. An agent refers clients to a bank loan officer knowing that their receipt of future REO listings from the bank may be dependent upon the referrals that they send. Does this violate RESPA? There's no formal agreement, but they know the more they refer, or they think, yeah, it's an implied relations, an implied between them. So, although let's keep in mind, it does not have to be in writing. Cash does not have to exchange hands. There doesn't have to be a money bag with a dollar sign on it that says here. It can be implied with the relationship with them, and it can even be referring to different banks, referring to different closing agents, all of that. So, again, use the forms that are on the software, rotate them, or just tell the clients, look, so, Google's available.
And on that note too, if you ever order services from anyone, make sure that you have disclosed to them that you are not responsible for payment should the contract terminate, and that you are not responsible for the quality of whatever work, and that it's explicitly written permission to order, and everyone is clear.
Oh yeah.
Because that's another.
Which that's on Josh's form, right? Are those
It's
for
on
free?
our form. It's on our form. But
Yeah, they're asking you to order those services, for instance,
And we will not
it's
until it's signed.
whatever. Yeah. No, that's just a legal liability issue right there. Again, if somebody goes in there and messes up the house or whatever, it's want to make sure of that. Yeah, that's a good point there. Definitely. If in this situation, if it can be shown every time I refer a loan customer to that loan officer, that bank gives me an REO listing, then this is one of those things where somebody starts looking and some complaint comes in about RESPA and somebody starts looking and one thing leads to another, and next thing you know, you've got this situation going on. So. Come on, Bill. There we go. All right, this one's all expenses paid. This one's kind of obvious too. Mortgage lender devises a contest among local real estate agents where the real estate agent who refers the most customers will receive a vacation cruise to Alaska.
no.
No, that's definitely not. That is definitely not allowed because it is definitely a kickback. Even though it's a contest, you're not guaranteed to win it, but purchase is required to participate. So you've got to. If you don't refer, you're not entering the contest, so that is definitely a kickback on that. So, what this doesn't say is that the cruise to Alaska is in the middle of December, but that's okay. So, here is
Submarine to the Titanic.
yeah, order that. Okay, this one. Now this one's got a two-parter to it. So, one part is a violation, one's not. Homeowners insurance company gives a real estate broker marketing materials such as desk calendars, pens, and notepads, all of which promote the homeowner's insurance company's name. Does that violate RESPA? That does not.
I don't think so.
That does not, because that is advertising for the homeowner's insurance company. If State Farm comes in, or a local agent comes in, gives out stuff, that's fine.
But arguably, could it be that if their stuff is the only stuff on display and they
No,
are
that's
the
a problem.
only ones?
That's a problem there. Yeah.
Okay.
Yeah, but you are not necessarily receiving a kickback because they give you items with their
Right.
name on it. Now, what if the homeowner's insurance company now says, hey, you guys need some paper? Or I went out and got True North Advisors printed on a bunch of stuff, here you go. Now they're giving you something with your name on it. That's considered to be a kickback. Why someone would do this, I don't know. Because see, at that point, they're defraying your costs of having to go out and buy that, rather than advertising for their own.
I do have another question.
Yes.
So a lot of title companies and lenders will co-brand
Yep.
on a lot of things. And I understand that there are I think co-branding is a little bit different,
Mm-hmm.
up to a certain amount of monetary value.
Yeah, there's some.
Is that a little bit?
Yeah, there's some regulations that are on that. A lot of times they'll have a brand on the, like they'll have the lender will have a mortgage division
Right.
of the lender. I think First Horizon does that, if I'm mistaken. They will have that, but they should disclose that this is a division of,
Okay.
for instance, there are some banks that are divisions of Bank of Tennessee. They should be disclosing that. That's more on the lender side. Also too, like advertising, you'll see it on advertising a lot, where you'll have a lender and you'll have a mortgage broker sitting in or you'll have a real estate agent in the bottom. And that's fine as long as they're paying for each of their own, you know, if the lender has the full page and the mortgage and the real estate agent has the corner, that's as long as they're paying for what's percentage of their advertising, that's fine. They can go in together for that advertisement, that's fine.
Okay.
That's okay to do that. But if the lender says, or the mortgage broker says, or I keep saying mortgage broker, the real estate agent says, hey, I'm gonna get an advertisement, I'll pay for it, you wanna join in on it, that's gonna be a problem.
So several years ago, we don't do it anymore because of RESPA, but several years ago, there was a title company that said, hey, we'll pay for all of your mail outs if we co-brand and put part of it, and I was like, I don't think you can't swing that, you can't.
That's
So we
kickback.
have since parted ways with
That's-
them all together.
Yeah,
But
that's
just,
a kickback.
they're very much pushing the envelope a little bit, you know, pushing the
That
boundary
is
a little bit.
definitely a kickback. Now, if they had said, we'll pay for half of it, you guys pay for half of it, that's perfectly fine to do that, because we're each paying our own percentages of it. But if they're saying, hey, we'll pay for the whole thing, you just stick your name on it, that's a kickback. Because obviously, as you saw, Ariel, that was noticed on that, that's obviously, they're trying to get you to refer business to them, and that's what's, that was the whole purpose behind that.
There's a right way and a wrong way to do co-branding.
Yeah, very much so. And advertising rules for RESPA are a whole nother ballgame when it comes to advertising with that. Putting, if you do your own advertisement with your own brand on there, your own name, you're not gonna run a problem with RESPA. If you start doing it with somebody else, that's when you're gonna have a problem with it. Even being careful on social media pages. If you
Which is the Wild West, or have been.
Exactly. And that's where more people get in trouble, no matter what is on social media pages. For instance, if you're saying, a lot of times I'll see real estate agents will put, thank you to so-and-so and so-and-so for doing this. Be careful with that, because maybe endorsing them. Maybe looking at advertisement or something like that. So you gotta be careful with it.
I always felt about being very plain and vague on what we're sharing, but
Yeah, you really need to be, because I haven't seen RESPA becoming involved too much into social media, but I can see it easily happening.
once the door opens, it's
That
probably
would easily
pretty
see
good.
it happening. And I think it'd be easier to do it on social
Oh, for
media
sure.
by accident than it would be. Doing mail outs, you gotta actually design it, do all that. Even web pages, you gotta design it, do all that. But social media is so easy to link, mention someone, put, Facebook, Twitter, whatever, they automatically put in the person's Twitter handle or Facebook, so they put their name in blue and all that.
Do it.
So you gotta be careful on what.
Sorry, I've got to.
Oh, no problem. Thank you for. So you gotta be careful on social media. That's probably the most dangerous part of advertising. So yeah, just gotta be careful about that. And keep in mind there is no minimal amount. If it's below $5, it doesn't count as a kickback. It's a kickback no matter what, no matter what it is. Clients can certainly give you gift cards, that's perfectly fine, no problem. But if the closing agent says, hey, here's a $5 gift card, that's a problem. Now, let's talk about one thing that's, a lot of times you may have vendors that you work with that say, hey, I'll give your clients a discount. If you refer them to me, I'll give your client a discount. I'm not paying you guys anything. But I'll say, they may say, well, I'll give your clients a discount. Well, I normally charge $350 to close, I only charge $300 to close for them, just because they're your client. kickback is not to you. That kickback, that's not really a kickback because you aren't getting anything.
Okay.
The client's getting the benefit of that.
Okay,
On that. But again,
is that still
the
a
client
gray
has
area?
the client still has to choose. The client, you may refer to that person, the client hates them. And at that point, no problem.
Okay.
The client chooses it. That the business disclosure statement, arrangement disclosure statement does have on there, you know, if you have any sort of arrangement with somebody, you may want to disclose it, that there is something there. If there's a question, disclose it. That's always done.
I have another question.
Yeah.
So, Karen and I are in-house notaries, and oftentimes we will just notarize, you know, if a closing needs to happen last minute, we'll do it here.
Yeah.
Would we need to do any sort of affiliated disclosure noting that we work for the real estate company?
Are you being paid to do the notary, or are you just providing it as a service?
Sometimes it just depends.
If you're just providing it as a service, as you know, it's ancillary to what you guys already do, then that's not a problem. You're
But
just
if there
providing.
is payment involved,
Yeah, if they're paying for notary services, you probably need to disclose that.
Okay.
And it's good to know you guys are notaries because I would need one, so maybe.
awesome.
So,
But we
yeah.
need to disclose it even if we run it through on the closing set, on the Alta and the settlement
If you're
statement.
charging a notary fee on the settlement statement, then you probably need to disclose that the notary
that's
works
good to
for the real estate.
And we could use a form similar to
Oh
this.
yeah, you could use a form similar to that.
Okay, that's a good idea.
So yeah, but that is a good point. I mean, you know, even something as simple as just putting your notary stamp on it.
If it's for our team, then I don't normally charge services.
Oh, yeah.
But if it's for outside of our team, then I typically do. It just
Yeah.
depends.
Yeah, so yeah, but if it's on if it's for a closing and you're receiving some sort of compensation for doing that, yeah, you need to disclose that. That's even though if they're you know they're doing the closing here at the last second, you're the only notary available, you know. That's what yeah. I'll do it.
Okay.
I would just disclose it, but that is a good point. Bring it up. So. There we go. All right, so a lot of these, I've got some suggestions on how to steer clear of violations. A lot of these we've already covered, but it's worth it. I guess it's worth running through again. Remember, RESPA is extremely complex. It gets longer and longer every day, so it changes. If you have a question about it, ask. Please ask. We've already covered most of this. When clients ask for referrals, provides a list of several ones to give them. Client makes their own decision. Written notice, like you guys already have, that it's their responsibility to interview these people, decide who they want to use, all of that. Also, the other thing is I personally don't think you can use this too much. The more information you put out there, the more you disclose what goes on behind the scenes, the better off you are. Because most people aren't going to care. They're really not. You know, about these types of agreements. They want to get their house closed. They just want to be able to get their house closed in a timely fashion and move into a new house or sell their house. So most people aren't going to be concerned with it, but if you have it in writing with them, here it is, they know about it, I disclose it to them, here it is in writing, just disclose it. You know, the number one, there is bring it back to with attorneys, with our ethical rules, there's pages and pages of it, because attorneys wrote it, and attorneys like to write things that are long and sometimes vague. But the bottom line is, be upfront, be honest with people. That's it. That solves all of this. If it looks like something that should be disclosed, just tell them that. That's the bottom line. That'll save you a lot of trouble in the future. And that's just the bottom line of anything having to deal with somebody. Just tell them up front. If you think you should tell them, tell them. Yeah. Questions, anything even beyond what we're talking about here. I'm happy to answer any questions. It's not even part about RESPA, if I can.
I just covered a lot.
Is there free forms to do like hold harmless, for other businesses, cause I have a cleaning business. Like I had a form, but I don't know if it's like correct.
Like
Just-
a release liability thing?
Yeah,
Yeah.
where would be the best place to get that? Like, is there free ones? Is there free templates online?
There's free templates online.
But it's probably not really legal,
Yeah.
or
Well,
it needs to be added,
I
or?
mean, they're legal if you want to put it that way.
I
but
think
it's
I'm gonna
probably not needed.
finish this up.
Oh, yeah.
Since we're,
Yeah.
so, thank you, Eric, for coming.
Oh, no problem.